So crazy how much that, you know, things tend to play out, right?
I know, it's wild.
Especially when, you know, we end up live right now.
Totally.
One day I'm gonna get you. One day I'm gonna get you caught up, Jolene. I'm gonna catch you.
No, you're not. Let me tell you what you won't do.
How are you, Jolene?
Good, you know, I'm tired, but
Oh man,
I'm excited.
I am too. I am very, very much so excited. I think that we got a lot to share with the people today. I think that it's gonna be pretty cool. So hopefully they enjoy it. But okay, so who do you think? Well, I don't think you know who's first because essentially, unfortunately,
It's not Reggie. It's not Reggie.
Reggie.
Okay, and it's not Vic.
It's not Vic.
I don't know them.
Congratulations, Kwame. You are first.
Kwame, what up?
Yes, congratulations. If you guys can, let us know like where you're coming in from. We got folks coming in from the DMV. Hey, everyone from Brooklyn, says Amy Trinidad. Congratulations. And on top of that, we see Deontay saying, what's up, cousins? What does it, cousin? And on top of that, somebody says, I guess that was Derek saying Kwame was first. Anyone with that name better let win. Oh, wow. Okay. We're not going to discuss that situation going on because that's like non-revenue generating conversation. All right. So what's good, everybody? I am Mark Monroe, accompanied by my wonderful co-host, co-producer, and good friend, the wonderful
Jolene GC in the place to be. Yo, Mark, I'm getting so distracted. Like I'm looking at these letters and trying to see if they're spelling a word out in the comments, but I don't see.
Yeah, because they said that they were gonna, we gave them a challenge to spell a word. I wondered, did that happen?
No.
No. There are
Y'all gotta coordinate.
I guess we have to still hold on to the surprise then until they can actually officially like figure out how to spell word. And it can't just be like a 4-letter word or something like that. What's the letter amount that it has to be? We got to make it somewhat of a challenge.
They said, well, someone, I forgot who it was, but last time someone said they should spell out come up. So the people that are successful in spelling that out, like, do they get something?
I don't know. Maybe, you know, maybe some one-on-one time. You never know. Or maybe even like an invite to the Matrix at the end of the year. What do you think about that?
I don't know. You know how I feel about invites.
The Matrix is tough. I'm gonna just let everybody know that. That's no. First of all, we're not gonna act like we're not just gonna speed past that. like that didn't just happen. Yo, by the way, loving the outfit. Yes, outfit.
Thank you. You know, my hat wants to have a life of its own right now. But no, I had to. No, this is not anything. First of all, this is age appropriate.
Non-alcoholic. I mean,
right. But it's you know that lemon ginger echinacea.
Okay. So I was gonna say, so it's not your lemon chiffon.
It's not a lemon chiffon because I'm on my key lime life right now. So
okay.
We making, my friend Cammie, she called it what did she call it? Lime Supremes. So it's like lime.
All these names, like how do you even do it?
Shout out to the Lime Supreme drinkers. Yeah.
All right. Well, if you haven't subscribed yet, go ahead and hit the subscribe button because, you know, there's a ton of content that you're going to be open up to. So feel free, enjoy it. If you like the video, go ahead and hit the like button. We would be truly gracious to bring in some more cousins from around the way that are out there and ultimately looking for a place in which that they're saying, hey, we're the people that look exactly like me and that I can relate to, that also talk about this thing called investing and trading and where can I make sense of it all. So here's the place to be, called the Come Up series, so none other. And on top of that, if you think that we could do better, we always are listening in on the comment section. Whether you believe it or not, we actually read them. And on top of that, if you want to be in the know and if you want to know when, say, for example, a new video drops, whether it's a wealth ritual or a Dr. Market episode, or maybe even something else, like maybe even a Sunday new Sunday episode that may be coming out. You never know. Go ahead and hit that bell so that way you can be in the know. And there we have it. All right, so
I gotta put on the record. I'm looking at the comments, and apparently today is National Wine Day.
Oh, they should have never said that. Well, I'll save that. I'll save that for the Lakers game.
Right, y'all. Cousin Taybell, he's like, please stop spelling because it's not working. You got to do it at the very beginning of the show.
Yeah.
Now
it's time to focus. It's definitely time to focus now.
The bell rang. Classes in session.
Wait, what was it like the tardy bell?
Yeah, it went off. The principal's roaming the hallways now with a bat.
Whoa. I don't know what school this was, but
that escalated quickly.
That escalated very quickly. All right.
You ready to get into the smock and whatever?
I am ready to rock out. Let's go.
All right. So what's up, everyone? It's Jolene GC in the place to be. And this is Trade Talk Tuesday. And today we're going to be talking all about trading plans, which I'm excited about. But before we get there, let's talk about what happened in the market. So we have the Dow coming in at negative 81.52 points. S&P 500 was negative 8.92 points. The NASDAQ was only down by a little sprinkle of negative 4.00 points. The VIX is coming in at 1884, which is lower than it was last week, y'all. And the 10-year treasury note is at 1.56%. Now for sector performance. As you know, there are 11 sectors. We track the top 3 and the bottom 3, so we can see what that rotation is looking like. So for today, we have consumer discretionary, real estate, and communication services coming in at the top 3. And then for the bottom 3, we have financials, materials, and energy. So you can get a feel for where the money is starting to flow, and tech is somewhere in the middle. I think it's a little after communication services. So it's coming. And then for the pick performance, if you want to follow our picks, you can go to that come up series on Instagram and see. You got to scroll through for the post, but it's there. And you can see all of the picks, aka the SIPs. And today we have Schrodinger, Synopsys, and C-Web coming in the top 3 spots. Then for the bottom 3, all in the red, we have MasterCard, SE, and TBT. So that's how the market did. I would be remiss if I did not put on the record that we are celebrating. What do we have? We're up to 61,000.
Yes.
Cousins, y'all are lit. So thanks for rocking with us. We appreciate it. And then also, on a different note, totally switching gears, I do want to put on the record that today is the 1 year. 1 year ago today, George Floyd was murdered. And I just want everyone to, just take the time to be extra gentle with yourself as you reflect about what happened over this past 365 days. So just be gentle with yourself, hug your loved ones, and yeah.
Can we have a moment of silence for our brother George Floyd?
Yeah.
Thank you.
Thanks. All right, let's talk about Black history, because we like to stay rooted in our ancestors, and just shout out to ancestors all over the place, including my girl Harriet. All right. Here we go. All right, so shout out to Brian Clyett, our historian.
Chancellor.
He be coming through with these history pieces. So if you want to talk to Brian about what history you would like to hear, contact Brian Clyett on, is he still on Instagram? Yeah, on Instagram. Brian, I'm just throwing you under the bus. I'm sorry. I think that's where people can find you, because people ask me and I'm like, I don't prepare the history Brian does. So definitely holler at Brian. So here we go. The Devil You Know, a Black Power Manifesto by Charles M. Blow. Acclaimed columnist and author Charles Blow never wanted to write a quote unquote race book, but as violence against Black people, both physical and psychological, seemed only to increase in recent years, culminating in the historic pandemic and protests of the summer of 2020, he felt compelled to write a new story for Black Americans. He envisioned a succinct, counterintuitive, and impassioned corrective to the myths that have for too long governed our thinking about race and geography in America. Drawing on both political observations and personal experience as a Black son of the South, Charles set out to offer a call to action by which Black people can finally achieve equality on their own terms. Here are notable excerpts from his work. Race, as we have come to understand it, is a fiction, but racism, as we have come to live it, is a fact. The point here is not to impose a new racial hierarchy, but to remove an existing one. After centuries of waiting for white majorities to overturn white supremacy, it seems to me that it has fallen to Black people to do it themselves. And then finally, the conclusion I have come to is simply this: racism behaves the way racism behaves. Racism wasn't and isn't geography dependent, but proximity and scale dependent. Black people fled the horrors of the racist South for so-called liberal cities of the North and West, trading the devil they knew for the devil they didn't, only to come to the painful realization that the devil is the devil. That's from Charles M. Blow, y'all. Very pertinent today. I especially liked the distinction between what he stated earlier, that racism itself is basically a lived experience, and the impact, even though it's a social construct, the impact is real. So Mark.
Yo.
Are you ready to talk about trading plans?
One second.
You're going off camera.
I am literally having a moment with self right now to reevaluate my life situation, to say, okay, I'm just kidding. Of course I'm ready to have a discussion about trading plans.
I could not. Okay.
I was going to do like the Morgan Freeman thing, like while you were reading, but I was like, nah, we're not going to do that.
Hilarious.
All right, putting in the final touches here, because I just did this presentation on the fly, just from this top of the dome here. So hopefully it pans out for everybody.
Well, I'll slow you down if you're going too fast.
And done. It's like getting in your homework. It's like you want to like get that final little piece in there. It's like, oh, I forgot about this. Let me add this in there.
Yeah.
So now we're about to get on this whole vibe called trading plans, if it allows me to be great today.
It doesn't.
It will. Don't worry. We got it.
Oh, this is a great time while Mark is setting this up. This is a great time to make sure that you have note-taking materials for this portion of the evening show.
I concur. All right, so, and boom. You see it?
Yes.
Oh, look at that. That boy good. All right, so what's up, everybody? So today is something in which that it's kind of like a little bit overdue, but we've been wanting to have it. It's actually funny because I actually did this a little bit on, I think, August of last year. And so I felt like I'd be remiss because, of course, in August, I'll be gone for a little bit of vacation, but I guess we'll discuss that a little bit later. But pretty much I'd be remiss if I didn't give you this information now, so that way essentially that you can use it to your benefit in moving forward. So we're gonna, like, some of the things that you'll probably hear today, you'll probably like be reminded of something previous. And then there's gonna be some other things in which that you'll hear in which, like, oh, didn't even know about that before. And ultimately this is gonna be kind of cool. Now, here's a little thing. Some of the examples I'm actually going to give you from my own specific trading plan that I just kind of like put into into a format to share with each and every single one of you, because that's the goal, right? So here we go. Let's get going. Now, as you know, mission statement of the Come Up series was and forever will be the game needed change. So we decided to help the culture be the cashier. That is each and every single one of you. And it's not only just monetary, it's also in the sense of the knowledge. I believe that the knowledge is more valuable than the monetary that comes through over time. So just be mindful of that. All right. So, but again, we talk about it's all about discipline. So take advantage of the tools that are available. So let's break it down. We're going to go through some of the first steps of putting together a trading plan, and then we're going to talk about the dream, the hustle, then the return, and then kind of like bringing in the final thoughts, which is AKA the vibe, I like to call it. Mm-hmm. All right. So let's get cracking. When you start off any trading plan, right, it's always going to be about implementation. So a trading plan is going to be there to help you build the discipline, which means that you got to stand for something. If not, you'll fall for everything. So stand for something, fall for nothing. That's one of the things that I always put in my trading plan when I set it out. I typically do my trading plans year over year, and then I'm just executing the trading plan throughout the year. But mine are a little bit more intricate because of the fact that I'm plotting it out over quarters. So I do it once a year, but essentially I have it broken into quarters over periods of time, which I have, you know, my targets as well as my pivots. And then on top of that, what are my step backs? That's a whole nother day for that situation. And when we talk about step backs, but so build the discipline. Then the next thing that you do is after you build the discipline, then essentially you execute. How long does it take for a person to become successful? Now, I give this out to a lot of folks in whom which that I mentor. And so I'm going to ask each and every single one of you, though we're going to do some YouTube magic. How long does it actually take for a person to become successful? Interesting thought. Well, what if I was to tell you that it takes 60 seconds, and that's what normally determines typically determines the successful people in life versus the folks who are non-successful. It really comes down to 60 seconds. If you think about it, let me step back out of this because I honestly want to make sure that everybody can see my face when I do this. When you think about like 60 seconds worth of when you think about 60 seconds, think about the amount of time that it takes in a 60-second process. Like think about autonomy, right? Mm-hmm. If we look at autonomous driving and autonomous cars and whatnot, essentially think about how much they're processing to make a decision. And we're talking about seconds after seconds and seconds of time. So when you think about it, like think about the time that it takes for you to realize that something's happening versus also coming forth with a plan and then coming forth with and then having a strategy and then essentially like literally making it up in your mind that you're going to execute. If you really break that down, that's really about 20 seconds a piece for the average person when you really think about it on the fly. And that can really determine whether or not you're going to be successful or not. Now, of course, given in the world that we have a lot of time, then of course you can stretch it out, but it's just more so in the sense of mindset. So I'm not trying to tell everybody that, hey, that you have to literally have it down in 60 seconds in order to literally get it all together, but it's a good start. So another part is the scale. So over time, you get better and the discipline and the execution become you. They become a part of who you are. So when you build discipline, it literally starts to become like second nature. When you develop the execution, it's just a part of the process. There's not a heavy duty amount of thinking. It's just really just like, it just becomes like it's an innate behavior. And that's really how you can start feeling a trading plan. So let's go a little bit further. Let's start with like just the very basics. Here's the first step. Having a pre-market routine. Now, this is more so for day traders, but if you want to think about pre-market routine for, say, for example, when you're starting on your first rolling fours, which is long-term strategy. If you're thinking, say, for example, as a swing trader, you have a pre-market routine. So whether it means like, when you wake up in the morning, you typically have a routine and what it takes for you to get up and get going in your process. The same thing should work when you're actually stepping before your trade desk. So whether it's like, for example, some of the things that I do is I consume news long before the market even opens. I'm looking at the futures market, which we'll get to that in a whole nother situation. But essentially what I do is I read the news, check the pre-market, and then on top of that, I'm also looking at what are some of the things that I missed while I had been sleeping. So what are the things that are impacting? So I'm looking at economics. What are any type of economic factors or economic risks that can implement today? I'm also looking at, say, for example, what's happening around globally. So I'm checking what happened in other markets while they're getting ready to go to their close. How did their markets trade for the day? If you think that the US market is only just impacted by the US market, then I'm sorry, you're sadly mistaken. It's a global economy, global market. So essentially they feed off of each other and they also act off of each other. For example, if you see that the NASDAQ and the Dow and the S&P 500 are down, 9 times out of 10, you're probably going to see some mixed or down behavior from Asia markets as well, and also potentially carrying over from European markets. So that's just something just to think about. So when you have a pre-market routine, what is it that you do before essentially you're established, before you say, okay, hey, I have more than enough to be ready and confident and comfortable to step to the trading desk or to step to my investment table to say, all right, I'm ready to start making investment plays or trading plays. And another thing in which that I do is also, there's such thing called a vow. Like it's a simple affirmation or like a simple promise in which that you keep to yourself and saying, I can and I will. And so what does that mean? Well, here's a simple example. I vow to fully follow every rule in my trade plan for the sake of my family and my future. Everything I have worked so hard for will be taken away by the markets the second I don't. That's a very simple vow to myself. So for me, it's like what I'm trading on behalf of is not just about me. What it's about is, the folks in whom which that will be reliant and counting on me. And that's my family, that's my legacy. And that's what I'm trading on behalf of. So after you make that vow to yourself, and it's okay to tell yourself that affirmation every day. And if you have an affirmation, go ahead and write it up and go. We'd love to hear it. Throw it up in the chat if you can. What is your vow? And so here are some things when we talk about goals. I'm a person where I like to keep things simple. So I run by what they call the KISS metric, keep it simple, stupid. So essentially I go by what, how, why. So essentially, what am I trading? What is it that I'm going to be trading that's ultimately going to get me there to that goal? How will I achieve greatness? And then why am I willing to work relentlessly at it? Now, of course, it's kind of interesting because for everybody that wants to understand how did the rolling fours even get started? Well, if you think about it, the rolling fours actually initially got started by me setting it up as it pertains to what is it that I vowed to myself and what are the goals that I set forth. And then ultimately the rolling fours was set up in this part and strategy. Now, if for anybody that just needs a precursor, I'm really running off of this strategy as it pertains to rolling fours. So I'm putting this into this presentation so that way you know that, okay, hey, I'm following based upon this metric or based upon this trading strategy. So nothing on the other side. This is it, the rolling fours. So just as a precursor for anybody or for folks in which that were not there, no need for endless trades. Just essentially discipline is everything. Deploy 4 times a year in capital and trade 4 times a year for 3 years. Learn to live with less, prepare to walk away, prepare for the walk away. Get to a place where you invest 70% of what you make for 3 years, then walk away. And then set SMART goals and execute. So are they specific, measurable, attainable, relevant, and time bound? Just so that way, if you need a precursor to that, you can go back to the August 19th episode. I think it's episode 3 in the Your Come Up called Trading Plans. But we're doing this again just as a precursor for everybody. All right, so, and we live by this simple model by somebody who is very smart and whom which that we can literally just say we are our ancestors' wildest dreams. So just so that way we have all that, we have our goals and we have our affirmations and we have our vows. So when you have those things, it's like these things should really keep you grounded from doing anything ridiculous, anything that's outside of what you're supposed to be doing. It will keep you sound, and honestly, it'll keep you in check. And if it doesn't, then maybe we need to go back and reevaluate even further. So then the next part of the trading plan is ultimately the market theory. So when you've been able to consume enough information, and I think shout out to Q for talking about information diet as it pertains to what is it that you bring in and how much of it are you willing to bring in. After a while, when you bring in X amount of information, you start to put together your own theories as it pertains to the market. So what does that mean? You define some constants or truths that you believe exist in the markets. I'll give you an example. The market can and will do anything. Another thing is, which is a gem that sometimes can go over people's heads, is old resistance becomes new support. At any second, the market can take everything I worked so hard to gain. I'm not smarter than the market, but my strategy gives me an edge. Strong trends typically go further than anyone would have thought. Those things typically keep you pretty much within a theory. And then it's pretty much the data in which that you bring in. Data will always validate any theory or any type of thesis in which that you put on the table. So when we think about that, when we look at markets can and will do anything, I mean, hence the reason why you can have the dopest thesis, but yet at the same token, the market can go down. Or you could be bearish against a stock, and then all of a sudden the market goes up, or essentially people go in a buying frenzy and the stock goes on a rally. Old resistance becomes new support. We start to verify those things by using technical analysis and looking at charts and looking at those levels. At any second, the market can take everything I worked so hard to gain. Yes, at any point in time. For example, the Fed, Janet Yellen as a Treasury Secretary. Once upon a time, another president that was in office would tweet something. Then ultimately that would send markets into a tailspin. And it can happen just like that. And then when we say, I'm not smarter than the market, but my strategy gives me an edge, that is true. Because a lot of times people follow things just based upon what other people say without even taking the time to validate it. And then when we say strong trends typically go further than anyone would have thought, that's also very much so true. So it's just a matter of looking at things over a long-term trajectory to be able to define that. Okay, so now that we got a market theory, now we have something called trade theory. So, and that's what we say when we define what thoughts, attitudes, and rules you believe are critical to being a successful trader. So I'll give each and every single one of you some examples. So if we think about it, example, consistency is the key to long-term success. That's a theory that ultimately over time becomes proven as fact. 4 basic outcomes: a big winner, a little loser, a big loser. Eliminate big losers for success. You're going to have little losers every now and then, but essentially it's like you want to eliminate those big losers. And the more risk, here's a little gem for you. The more risk that the more riskier the position, the bigger the opportunity for it to be a bigger loss. So for example, if you go very, very heavy into a very, very risky play, then you have to examine that can either be a very, very big win, but on the flip side, it can also be a very, very big loss. But also, here's an interesting thing is you can win big and also go long-term and de-risk yourself. It's just a matter of how is it that you choose to strategize it. And then there will always be another trade. So when you lose in a trade, or if a trade goes sour or whatever it is, there's always another trade. There's always something new. There's always another opportunity, because if that was not the case, then this thing that we call the market would cease to exist. The market is built of tons of opportunities. There's an opportunity waiting on every turn. Taking trades outside my trading plan will destroy me. Sometimes they work, which is one of the worst things. Now, what do I mean by that? When you set forth a trading plan, it's like when you go outside of the plan, it's like, yeah, a broken clock can be right twice a day, but it doesn't mean that, okay, so that just means that the broken clock is correct during those 2 different types of hour timelines. But what happens during the rest of those 22 hours of the day? And that's what brings us into that next part, risk management. Now, when we think of risk management, it's like we think about like, I like to define risk in this simple term. We've all grown up, or we're all growing up. So essentially it's like, we're all in different walks of life, but you've experienced risk as a child. Like, for example, the risk of, for example, your parents go out of town and they tell you not to throw any party at your house. Now you want to throw on a party, and you know that that could be a great reward. But at the other flip side, the risk could be that the fact that your parents could show up, your neighbors could be like, they could literally be snitches and literally tell on you and call your parents and let them know. Or three, you could literally have something break, or the police get called, or something happens, and then that's literally risk on your table. Now, whether or not you have that stomach for, or that life of risk, that's up to you. But it's a matter of how is it that you choose to manage it. So here's some rules, or here's some things in which that we can look at. And this is where it comes to money management. It's the key component to a successful trade plan, and typically one of the rules that is broken by new traders. So, for example, if you're in the process of ultimately using the capital that you bring to the table, and they always say that one of the most common rules, Jolene, is, you want to know the most common rule that's always broken by new traders?
What? Don't lose money.
Don't invest with money that you can't afford to lose.
Oh, yeah, that makes sense.
That's one of the most common rules that's always broken amongst traders, because of the fact that the allure of the opportunity looks so good. I mean, like, the beautiful thing about that I love about like what you and also like members like TiVo and many of the other cousins have done, especially given the one contract game, is the fact that it's like, hey, if this is what you have to invest in, that you're comfortable with investing in, if it gives you one contract, then so be it. There's nothing wrong with that. Versus essentially like betting your house. No, I don't think I've heard of anybody doing that, but betting your entire house on, say, for example, something that's like a weekly trade, or say, for example, calls that are ridiculous out of the money, that essentially that even the stock couldn't even on the stock's best day, it could never achieve that. And then essentially betting the house and saying, hey, well, I can't afford to lose this house, but I'm going to bet it anyway. You're not investing at that point in time. You're gambling. Losing trades are inevitable. Your money management needs to define not only what you will risk per trade, but also what you will do in the event of a large drawdown. So I guess here's some things in which that can help as it pertains to the rules of this game. And this is here's something in which that I did early on. I had to go way back to look at this. I had two rules growing up as a trader. Rule number one is 3 losses in a row, I'm done trading for the day. Like, abort the mission. This is me back in the day when I was a day trader. So this is just I'm just giving you some of just an early glimpse of what it was like for me. Rule number 2, a certain consecutive amount of trading days negative in a row, cut trading size in half. So essentially I start to cut back. Risk management doesn't have to be overly complex, y'all. Decide what you will risk per trade and your max drawdown for a day or a time being, and you're 90% of the way there. So then after all that, I mean, now, of course, on the other side, the other beautiful side to that is essentially it's like when things are going right and the trades are going well, and you sit back and you're so excited for all the things in which that you're doing, and it becomes so much more simpler. But yet at the same token, you always still find ways in which that you can get better. And this is one of the things that I love about the weekend. Outside of the fact that there's no trading activity unless you're trading in futures and bond markets. But one of the interesting things that I love about it is the vibe, which makes it all worth it. Review. You review your trade's performance week over week. So essentially one of the beautiful things that I've done, and I have continuously done over the course period of time of my trading, is I review the performance of my trades week over week. So Monday through Friday, I'll look at the performance. So I document like what was taken or what was gained on Monday, Tuesday, Wednesday, Thursday, Friday. And then I bring it all in together for the week. And then essentially I sit back and I just review it just to see exactly, okay, hey, how does that compare week over week and month over month? You start to see some things there. So then when we talk about the next part is I evaluate. Is the thesis still intact or are there changes that will need to be made? Now, when I talk about thesis, I talk about what are the things in which that I'm gaining from, and my thing is I like to stay ahead of the market. I like to stay ahead with the information I know that I understand that is coming down the pipeline, in which that may be considered rumors in the current standpoint that I'm ultimately looking to validate while they're still rumors before it becomes the news for everybody else.
Mm.
And so for me, that helps me understand exactly, all right, well, does the thesis still hold? Does the center still hold here? If it doesn't, then I probably need to go back and reevaluate what is it that I'm actually doing. And ultimately, I may need to possibly be looking to exit out of such a position. And then the other parts of that is strategize. It's like many times I do my finest work when the market is actually when it's not even open. Because why? I'm not on the clock. I'm not up against the gun. I don't have to look at something. I don't have to like say, okay, hey, well, what's happening here? I don't have to do any of that. What I'm doing is I'm just like literally sitting there chilling with a nice glass or a bottle of water with some great music, good vibes going, and sitting back and just thinking about like, okay, hey, I've reviewed, I've seen the performance, I've evaluated because I see, okay, hey, either my thesis is going to have to change a little bit, or essentially it's going to evolve to make me even more bullish or bearish, or essentially there may be something new that may be coming down the pipeline that I see that's even juicier. So ultimately I'm going to strategize and I'm going to make the necessary changes that need to be made. And that's a vibe. I mean, when you really think about it, no pressure, none whatsoever. And that right there is how you can build a solid trading plan. Now, the beautiful thing is that you're going to take today's video. You're going to take today's video and you're going to say, all right, well, that's cool. And pretty much, hey, let's go back and watch the trading plan video back in August and then take what I've gained today. What is it that I get when I put it all together? It's a solid trading plan. It's a very solid trading plan. When we talk about risk management, I think in the video I talked about risk reward ratio. And a lot of traders talk about that. And so they talk about like, okay, hey, the very base for a trader is about 1 to 3. So which means that for every dollar that you invest, you expect that there's a 3 on the other side. Now, if you're very good at it, then essentially you will get to a point, or it's like essentially if you start doing certain things based upon a certain disciplinary action when it comes to trading, you can get to a point where you're at 1 to 18, 1 to 25, 1 to 32, 1 to 45. You can get there. Now, does that mean that that's going to be consistent always? No. But having some type of benchmark average is solid. It's good for you. Not having a plan is like having a plan to fail. And so essentially it's like, that's when we look at solid trading plans. And that's ultimately how you build it.
Well, that's dope, because this was the question. I saw plenty of these questions along with some other ones in my DMs about, the trading plan, and people thought they had a trading plan because they wrote down something about, like a sentence or two, and that's not a trading plan. So that's good. I'm glad that we're able to address this because, I'm all for minimizing the DMs, all for it, Okay, so just by way of, so you talked about the risks to reward, which is key. But going back to, what was it that you were talking about? Going back to like the actual plan of it all. Mm-hmm. You said that you do your plan a year in advance.
Yep.
Quarter by quarter. Now, for the cousin that is just starting out and they're not in the same capital, as far as
you don't have to be. So here's the thing. Yeah. It's like, here's the thing, and that here's a common misconception about like folks in which that like look at, the most successful traders. A plan is a plan. Mm-hmm. It's like the money thing that's different because that's just a matter of how much capital allocation that you're going to be designated towards specific trades. I mean, what's my capital requirement, or how much is it that I'm going to designate towards each trade? So you could say, okay, hey, Mark, or hey, trading plan. If you need to call your trading plan Mark, so that way you can make it a person, that's fair. Or Jolene.
Do not call me.
Not call your trading plan Jolene. All
Get
right.
a different name.
Or hey, come up series. You can say, all right, well, here's what I'm going to allocate when it comes to my portfolio per trade. So you could probably say, okay, hey, instead of being 100%, I'm going to do 25%. So this quarter, I'm going to designate 25% of my overall capital towards this trade. And then the next quarter, I'm going to designate another 25% towards another trade, and so on and so on and so on. Bringing in that same type of category of rolling fours. And then when we talk about, like, if you still want to have cash on the side, you can still do that. So you can say, all right, instead of me doing 25%, I'm going to do 20% per quarter. So then that brings me to 80%. Now, a lot of folks are talking about this thing called hedging. If you build that in your trading plan, then essentially you can say, all right, well, then there's 2 points of the year in which that I know that the market is going to get a little shaky. For example, we can say that August, September, October, that we're going to expect some shakiness there, because that's typically around the time that we see strong pullbacks or corrections. The other time that we see that is right after, like, the Q4 earnings, which is right after January's earnings. The market tends to go in a cool off period from February, March, April, and then starts to kind of like rebound itself going to May, June, July. So you could be literally saying, okay, hey, I'm going to allocate this other 20% of my portfolio just towards hedging against my long-term positions in the short, over that period of time, over maybe, let's say, a 6-month span, to say, all right, hey, I'm going to get out here and then literally just hedge against myself. And then pretty much once I've made money to the downside, I can literally reallocate that or save that towards another time. That's all within portfolio management. And that's really how is it that you manage your capital as it pertains to, like, okay, hey, what am I going to designate where?
Well, I'm glad you mentioned portfolio management, because that's coming up soon.
It is. It is.
I'm gonna have episodes, y'all, about managing your portfolio like a G. Okay. So that's good. I'm looking forward to that. Now, also, okay, so we have the cadence or rhythm of the trade. You know, you can do it however fits best for you. Now, when it comes to, I think it's important to talk about, even though it's review, to talk about 70-30. You know, and how that plays into the trading plan, because I think that's also key. You kind of froze up, Mark?
Yeah, I think I kind of froze over here. I'm back.
You're back.
I'm here.
Okay. So I was asking you, well, I was basically commenting on, like, the importance of 70-30 when it comes to this investment life, and like how that plays out, like, once you walk away.
The trading plan still works. I mean, essentially, it's like, you know, like, you may adapt your trading plan. And that's why I said it's like, it doesn't matter exactly how much money that you have or whatever else. It's like your trading plan is still your trading plan. And it's just really there just to give you the discipline. Now, I want to make sure that I'm very clear. Trading plans are not the same as the strategy.
Right.
The trading plan establishes the discipline. The strategy is really the plays that you're going to be putting forth that are built from the discipline. So it's following a discipline in which that you've established for yourself. So that's the biggest thing. So, for example, whether you're a scalper or you're a swing trader, you're a long-term trader, you're a long-term investor, or even if you're a day trader for stocks, or you're a futures trader, bonds trader, it's all the same. I mean, it's all the same when you look at it as it pertains to the trading plan. Now, of course, the elements of the trading plan are the same. The difference is as it pertains to how is it that you move. Those may be different, because if you're a scalper or a day trader, then of course you got to be in and out. If you're a long-term leaps trader or a long-term holder of investment, it's a lot easier. Another thing is that, you know, for example, you know, if you, like, one of the things that's very, and I'm living proof of that, is when I started off as a trader, like in college, I actually still follow that same rudimentary trading plan that I've had since 2004. You know, of course, I make tweaks and iterations here and there, you know, as, you know, that's accounting for variable change. But for the most part, it's like, nah, I'm not changing like that's like, for example, saying that, okay, hey, Kool-Aid, like when you grew up drinking Kool-Aid, and your parents, you knew that your parents, if your parents made some dope Kool-Aid, like some good Kool-Aid, now I can't speak on behalf of the Sour Patch.
I made the Kool-Aid in my house. Okay, I made the Kool-Aid.
You knew the certain type of pack to sugar ratio that needed to go into Kool-Aid. Now, if you were going out there and listening to somebody else's recipes and everything else, that's on you. But essentially, it's like, that's like, all right, hey, you stick to a plan, you stick to the recipe. If you break that recipe, then you fall in. Then now at the point you potentially raise the risk of, hey, maybe this Kool-Aid may be a little too sweet, or it may be a little too sour, but it won't be just right the way that I'm always accustomed to. It's kind of like in that same kind of, it's kind of like in that same type of reference, in the sense that, okay, hey, when you set forth a plan, like that is it. You stick to it. Now, if there's, like I said, if there's things that come along that may have to change or may have to tweak some things here and there, then so be it. But you stick to like the overall skeletal system of your trading plan, you should be sticking to. If you have to always consistently alter your trading plan, then you did not set up a good trading plan. Either that or you're not following the discipline. And a lot of times that where people start to like abandon their trading plans, they start to abandon their trading plans because of the fact that one of the things that they do, either two things happen, and I'll give you both sides. So on one side, the easiest one that we'll point out is when things aren't going right. You start to panic. You start to panic, and then either you start to sell, or you start to break, or you start to do X, Y, Z. That's never a good recipe for it. The other part is when you're up and then you get cocky. When you get very, very cocky and you're like, you know what, I got this, and then you don't follow your trading plan.
And your portfolio reflects it.
And it's like, here's the thing about me. And it's like the thing that like, and I want people to know this about who I am as it pertains to me being a trader and like my journey. Personally, me, I don't really care about my wins. I don't really care about my wins. I mean, for me, what I really, really care about is the lessons in which that I learned more so during the process in which that I lost. Like, for example, first things first, I learned that sometimes I had a habit of being very, very cocky. And sometimes my cockiness in the early days superseded my talent as a trader. So what happened is that when I got cocky, it's like many times it's like, all right, I got cocky, and then boom, the market hits me, like, because I'm over here going on my victory lap in celebration and thinking that, hey, that, the market's out for the count. Market rises up like the Undertaker. Next thing you know, I catch a hook and I'm out. And it's like that. And so I didn't realize that until as I became better as a trader, I said, all right, look, I gotta like make sure that it's like I'm studying up and I'm always like on my toes, in the sense of, hey, yeah, I may have knocked the market down, but I expect that the market is always going to find a way to pick itself right back up and come for me. I always expect that essentially that I'm always on my toes and realizing that the bull market could potentially come to its end. But I also realize that, hey, I alleviate a lot of those stresses, though that I still see them. I do alleviate a lot of those stresses by focusing my attention towards really long term.
Yeah, the long-term part for me personally has been like, I have, did a little dabbling here and there, but not with money that I would, care about, like I care about it, but it's like, if I lost it, then okay, like I'm willing to pay for that lesson, so to speak. And also I think one of the other biggest lessons is that timing piece, like knowing in the beginning of the year, there's a very good chance based on seasonality that there's going to be a dip. So if you're caught with, I was caught with some January 2022s on some arcs. Whoo, man, the feelings, the feelings. But at the same time, you know, part of my
it's
plan,
a humbling experience.
it is.
It's
It
a
really
humbling
is.
experience. Like, you know, for me seeing that, like, and like, imagine how that feels for like any of us, like, because we love what ARC has within its thematic investing and within its portfolio. But at the same token, it's just like, you know, hey, you know, I love like what Kathy and her team are doing. They have dope picks when you think about it. And it's like, yo, it's amazing how other ETF companies never put those together. It's amazing. But yet at the same token, it's like, yo, it's hurting my portfolio. It's significantly hurting. It hasn't stopped hurting my portfolio. But yet at the same token, it's like I find ways in which that, okay, hey, I'm bleeding here, but yet at the same token, bandages are on the way to help stop the bleeding. And that's something that I attribute for it. Though that I'm a huge fan of ARC, but at the same token, I always have that humbleness that takes me all the way back to March 2024 and say, okay, this can screw up. This can screw up. And that's how you got to think about it. Like that discipline will literally carry you through. It will keep you humble. The trading plan will keep you humble. It'll keep you disciplined. And on top of that, it'll always keep you wanting to ultimately go forth and do more. It'll always keep you wanting to go forth and research more, to improve on your process, because trading plans ultimately kind of help you strive to just become a better version of what you currently are.
And what's dope is you can go back and look at it and see like how you've grown, like, and you know, also like what was going on at the time in your learning. It's just like going back to watch, you know, the starter pack, which I don't know how many times I've seen the starter pack, because we've been, you know, taking groups of people through them or through the starter pack. But I always learn something new. And I've heard, you know, other people do as well. And it's also something you can put into your trading plan, is to review past teachings. That could also be a part of your trading plan as you're setting up that discipline, to always be a student and to be humble. Because if you are cocky, the market will definitely humble you. Especially after earnings in January, February, March.
Yeah, I mean, it's interesting because it's like, you know, just thinking about it, like for me, like, you know, 2024 trading plan mark, like that was like, I was super cocky. Like, you know, I'm walking on water cocky. Like, can nobody tell me nothing? Like, I've already walked across the graduation stage cocky, and I'm a freshman. And then 2018 was, I would say it was like a slight cockiness, but it was like very little cockiness there. It was more so in the sense that, you know, honestly, I was focusing on something bigger that was even bigger than my own portfolio. And so for me, it was just like, all right, well, you know, coming back is like, all right, well, you know, I took this hit, but yet at the same token, look at all the things that I did outside of brokerage. It's just, those are two totally different things. But the thing that remained the same though, across those things, is I had a trading plan. So here's how my trading plan looks like over a year span. And I think that people can do this. You can do trading plans over a year, especially for folks in whom which they're going to be going back to work. And it's like, you can just like spend the time over the weekend. You don't have time to look at the market every single day. You can look at it like this. You know, when I set forth my trading plan, I have who are my key winners that I expect to win through the year. Now, I also keep in mind that, okay, hey, that, you know, they can screw up. So essentially, who are the backups? You know, every now and then, it's like even the best players they have a night off. So when they're having a night off, it's like, okay, hey, next man up, next player up, who's going to ultimately take their place? And so essentially, I have those. And I establish those throughout the year by looking at the long-term trajectory of what's coming down the pipeline on an economic standpoint. What's also looking at, like, for example, the things in which that, you know, hey, that I expect. I look at it from a simple key standpoint of a 4-quadrant. I look at the things in which that I know that the market knows. I look at things in which that I know that the market doesn't know. I look at things in which that the market knows that I don't know.
And then overall, you look at all the things that the market doesn't know that you know, and then you make a little note that says, be sure to tell Jolene.
Well, there's that too.
That's
But then there's this other
plan.
one where it's like, it's what the market doesn't know and what Mark doesn't know.
Mm-hmm.
And it's like, it's like, that's a dope thing to do. Like, I challenge everybody to do so. Build a 4-quadrant of whatever strategy play that you're looking at doing, and literally draw like like playing Foursquare, and draw those things within the box. Box 1, what is it that you know that the market doesn't know? The other side of the box, what is it that, on the opposite side, what is it that the market knows that you don't know? Or that you have yet to learn, or that you recently learned? And then on the other side, what is it that you don't know, or what is it that both of you don't know? And essentially so on and so on. You do that, then essentially you start to notice that you'll start to see some similarities. You start to see some behaviors, and then you start to look at your own thesis and say, okay, hey, does it really fit?
Mm-hmm.
We may have to do that as an episode where I actually go through multiple companies and do a breakdown.
That'd be fun.
We'll see.
I think that'll be good. Oh, someone was asking, did I exit out of the January 2022s of ARKK? So for my trading plan specifically for ARKK, I shaved off. I had a ridiculous amount of contracts, and I shaved off and shaved off and shaved off and shaved off. So by the time the ARK was starting to dip, there's also like a trigger in my trading plan that basically it's all performance based. So if the stock or the ETF is not performing at the certain performance that I designate in the beginning of the trade, then I either pivot or exit out of the trade, or exit out of the trade completely. So for the ARKKs, I'm out right now, but those will be, I'm still going to I will be re-entering and reuniting with ARKK and SMH. Yeah, but at a later time. So
I sense 2024s.
Yeah, that's what I'm waiting for. So for me, it's like I got what art came to give. I took it all, and so, but again, my trading plan in January, it's shaving off time, aka taking profits. So that's my plan.
For me, I did not. I didn't do that. So for me, I'm actually taking can you hear me, Jolene?
I can, but you're frozen. I can hear you though. Now I can't hear you.
Wait, can you hear me?
I can hear you. You're back.
Okay. Okay. Lo and behold, I had some things running in the background, and I just finally realized it at the close of the episode.
Okay. And it's 7 o'clock on the dot, Lakers.
I know, so I'm gonna have to roll out. But one of the things that I did was, so for me, I'm still in a lot of those positions, but I'm using those as capital losses.
Mm-hmm.
And then essentially I already have other things that are ultimately brewing on the other side, because I had ARKK and many of those things running up against the benchmark of the S&P 500. So that's a good gauge to actually run against, especially like, a company like Tesla, running that up against the SPY benchmark.
Mm-hmm.
And then essentially from there, it's like, okay, hey, I start to see other things that are starting to outperform within the S&P 500. Like, for example, that's how I was able to spot, TBT on the treasury side. That's how I was able to spot JP Morgan. That's how I was able to spot like FT&T and Visa and MasterCard. And here's the thing, shout outs to XLK, because ultimately XLK, thanks to Visa and MasterCard, truly held it down to the point where it didn't really lose anything. So
well, XLK, just in general, XLK has not gone red in my portfolio yet. That's what I'm saying. XLK is the parent. It is sturdy. It is established for me in how we roll. Like, it has never. Granted, I did get in on a good entry, but I'm saying, like, it has remained green, just like Tesla has remained green in my portfolio. It has not gone red, even through all of this rigmarole. So,
All right. Well, somebody just sent me a message talking about Lakers. So
Yeah, it's time to go. It is time to go.
all right, y'all. Well, we got to roll out, but definitely we are going to be definitely coming in hot on Hot Take Thursday. So
Are
just
we? No, I'm
there's
just
definitely, oh yeah, I'm definitely bringing in some heat on Thursday. So I'm going to say this: road to vacation. It's definitely going to be a scorcher.
Oh, we should just put that on the record now. Y'all, in August, we'll be gone for like 2 weeks. Okay. There is not going to be no come up on Tuesday and Thursday. We are going to be gone. So I'm just preparing y'all now for that.
Yes, I will be off to an undisclosed location.
Yeah. So just, just for that, just be aware that I'll probably be working on wealth rituals too.
Well,
yeah.
Jolene, thank you for rocking with me tonight. I know, as always, you're awesome and amazing. Thank each and every single one of you out at home that were rocking with us. I'm about to go and enjoy the Lakers. TiVo, my Lakers are coming for you. But, hey, all love. We will see you on Thursday. Keep learning, keep researching. The more you learn, the more you earn, and be kind to everyone. We'll see y'all in the next one. Until next time, I'm Mark Monroe.
And I am, right now I'm going to be JoleneGC.com. That's what I'm going to be right now. Not even in I'm just going to be JoleneGC.com. If you need to know about me, you go to my name.com and you'll find out all about me.
Well, then there you have it. And this has been your come up. We'll see you on Thursday, y'all. Peace.